Welcome back to another fact sheet video of ithought for the month January 2026. As we step into the new year, we always say new year, new me, new us. Let us see how our PMS strategies here at ithought held for the month of January 2026. January started the year on a cautious note for equity markets. After the strong and volatile moves seen through 2025, investors began 2026 with some profit-taking and reassessment of valuations, especially if we see the precious metal space. Large caps were relatively more stable while diversified strategies once again showed the value of balance. And I thought we did not deviate once again. Our focus remained on quality businesses, managing risk carefully and staying aligned with long-term wealth creation and goals rather than short-term market movements. Let us look at how our PMS strategies fared one by one. Let's look at our flagship product Solitaire, where we always say quality first. Solitaire saw a return of minus 3.87% in January, broadly in line with the broader market environment. Short-term volatility aside, the longer-term story remains intact. Solitaire has delivered the following returns. Take a look at your screen: 7.11% over 2 years, 20.19% over 3 years, and a strong 20.57% CAGR since inception in August 2019. The portfolio continues to be anchored in well-managed businesses with proven models, with nearly 76% invested in debt-free companies and a low beta of 0.76, helping contain risk during market drawdowns. Core allocations to sectors like FMCG, financial services, capital goods, and automobiles provide a balanced mix of stability and growth, keeping Solitaire rightly positioned as a steady flexi-cap compounder across market cycles. If you think this product would fit your profile, get in touch with us today. Next up, we have TruBlu, which is the large cap stability in volatile times. TruBlu declined minus 4.59% in January, reflecting the broader pressure across large caps as markets adjusted at the start of the year. However, over longer periods, TruBlu continues to stay consistent, delivering 9.4% over 2 years, 13.31% over 3 years, and 11.47% CAGR since inception in March 2021. Built entirely within the Nifty 50 universe, TruBlu focuses on eliminating weaker businesses and holding on high-quality leaders. With a portfolio beta of 0.77 and meaningful exposure to financials, automobiles, and FMCG, TruBlu remains a low volatility large cap strategy designed to offer investors stability and predictable compounding through market cycles. So there you have it, the bluest of blue chips right in front of you. Start your journey with TruBlu today. Next, if you're looking for small caps in a reset phase, Vrddhi is just for you. Vrddhi ended January at minus 1.8% as the small and micro cap segment continued to go through a phase of correction and consolidation. While near-term numbers reflect pressure, Vrddhi's long-term strength remains visible. Since inception in May 2021, the strategy has delivered 18% CAGR with 17.7% over 3 years despite the recent downturn. The portfolio stays focused on emerging leaders in niche markets, with 58% of companies being debt-free, 63% market leaders, and nearly 43% of the portfolio in businesses without external research coverage. Vrddhi continues to be a research-driven small-cap strategy built for patient investors who understand that long-term value is often created during uncomfortable phases. If you would like to get exposure to such niche businesses in this space and discover some real gems, start your journey with Vrddhi today. Now, when we speak of diversification doing all the heavy lifting, that's where we introduce Sphere. Sphere, our multi-asset product, stood out in January, delivering a positive 0.82% return, even as equity markets corrected. Over the last year, Sphere has returned an impressive 31.9%, while over 3 years it has compounded at 28.54% and 24.3% since inception in December 2021. The strategy's strength lies in its macro-focused asset allocation across equities, debt, global assets, and precious metals. With gold, global exposure, and debt playing a stabilizing role, Sphere continues to demonstrate how disciplined diversification can protect capital while still participating in growth over time. A true gem and true to its name, Sphere, a 360-degree anchor across market cycles if you have seen volatility in the various asset classes the previous year and the year to come. Get in touch with us today if you would like to invest and understand more about this product and how moving from one asset class to another, especially in a market like this, can prove to be very beneficial for you. And if you're an NRI that's looking for a multi-asset option, NEO is just for you. This product closed January at minus 1.26%, reflecting the cautious tone across global markets. However, the longer-term performance remains healthy with 21.52% over 1 year, 22.37% over 2, and 23.96% since inception in October 2022. With a portfolio mix dominated by equities and supported by precious metals and debt, NEO offers NRIs a well-balanced structure to participate in India's growth story while managing global risks. The strategy continues to focus on steady, disciplined compounding rather than short-term tactical moves. If you want to know more about this, get in touch with us today. Some closing thoughts before we end. January reminded investors that markets do not move in straight lines even at the start of a new year. Corrections, pauses, and rotations are part of every journey. At ithought PMS, our strategies Solitaire, TruBlu, Vrddhi, Sphere, and NEO remain rooted in research, quality, and thoughtful allocation. Rather than chasing momentum, we continue to build portfolios that can stay invested through volatility and emerge stronger over time. As 2026 unfolds, our focus stays simple. Protect capital when needed, participate in growth when available, and let discipline guide every investment decision. Thank you for watching this video. Stay tuned as we come to you with more such fact sheets.